Nancy, even if you're constructive on stocks long term, do you fear a bit of short-term seasonal weakness?
Yes, thanks, Wilf. Absolutely. We've actually been sort of rooting for this correction. You can't, as we all know, go parabolically up without any breather. And so I think now we're starting to see some of the stocks come in that we're interested in. We see very constructive fundamentals for long-term equity growth and even near-term equity growth. With a weaker dollar, that should boost multinational earnings. You've got liquidity still in place, still 4-to-1 dollars going into fixed income ETFs over equity ETFs. And dividend increases are signaling to us that managements are pretty optimistic about future earnings power.
Especially when, Nancy, there was so much fear over cutting dividends and buybacks and during the height of the crisis. Remember when all of that was supposed to just go away for forever, maybe? So what types of stocks are you buying? You said it's a good time for some of your favorites.
Yeah, so we've been adding to industrials pretty seriously over the last 3 to 4 months. We've added significantly to consumer discretionary. Those are 2 of our overweights. We're also overweight technology, but not in the growth at any price cohort. Rather, we're looking for names and have found names in software and chips that are also growing their dividends, like Texas Instruments, but are in the sweet spot of where we're seeing tech CapEx grow and actually surpass traditional CapEx in the U.S. So there's a real secular change going on, and that's why I don't think you should run away from these stocks. You should just be deliberate as you add to your holdings.
Nancy, do you still own both of them, and what did you make of these downgrades?
Yeah, we do, Wilf. We own both Lowe's and Home Depot in 2 of our large cap equity strategies. I actually thought it was a pretty smart downgrade in that the analyst has argued that he's still bullish long term, as you just said, Sarah, but that he's concerned near term, and we would actually just disagree with his premise somewhat. We think housing continues to be strong in the coming years. It's got the tailwinds of lower interest rates, demographics, demand, and deurbanization, and a lack of supply, frankly, all at its back. And so we think that while there has been demand pull, surely that there will be that the future purchase power of millennials will drive some of this. And then we've got storm season, which I hate to suggest is a good thing for the stocks, but it is. That said, I agree that Lowe's probably has a better opportunity from here from a price appreciation standpoint, just because they are getting the company in line and logistically in a much better place than it was. And so we think the opportunity for outperformance there is a little bit greater than Home Depot, but we still own both.